Happy New Year. It is 2026 and we always know that the end of the tax year come 31st of March comes at us pretty quick. I'm here with BDO tax experts Iain Craig and Mark Lodder. Iain, I'd love you to kick us off. Can you please give us your top 3 things that business owners should be considering before the tax year ends?
Yeah, sure. I always start with bad debts. We've got tax law that says you've got to write it off the debtor's ledger and out of your general ledger before year end. So it's not something you can do as part of your year-end financial accounts, which are done after year-end. So you've got to make the decision to write it off as a bad debt, not a doubtful debt, before year-end, and that's deductible. The second thing, and it's probably, reflecting we're just back after Christmas, I always think of charitable donations. It's a good time to make donations to approved organisations. You get a donation receipt from the charitable cause, and you'll be able to get your a tax back on that, either as a deduction of your taxable income or a rebate, depending whether you're a company or an individual that's paying for it. And you can file that quite soon after end of tax year and get that rebate. And the third thing was, we always do work with owners of businesses and looking at perhaps paying dividends out before year end. Key thing there is managing the imputation credit account of the company and making sure it's not in a debit balance at 31 March, because that will cost you 10% penalty tax.
Interesting. Mark, give us your 3 things to be thinking about already.
Iain took the best one with bad debt, so that makes life a little bit difficult. But so 3 things. The first thing, you should always manage this, but overdrawn shareholder current accounts. So do you need to charge interest? Are you going to repay them through a salary, etc.? But overdrawn shareholder current accounts is a biggie. Think about elections. So there's always timeframes for elections. Do you want your entity, your group, to be in a consolidated group? Do you want your company to become a look-through company? Timeframes, elections are really important. Tend to revolve around the year end with a little bit of time. So that's another thing. And my last thing, I shall run. I'm tossing it up.
You can give us 2. It's fine.
Can I?
Yes.
All right. I'm going to go with thin capitalisation. So if you're foreign owned, in particular, do we get our full interest deductions? Do we need to be thinking about how we calculate thin capitalisation, balance sheet approach, revaluing assets, etc.? And the last one would be trading stock. Trading stock's always a winner. Is there anything you need to do before the end of the year to claim a deduction for trading stock which is now obsolete? For example, do you need to scrap it? Or is there something else you need to do? Those are my top 4.
You got 4. I need one more.
Go on, throw it in.
And it's kind of on that election side of things. There are some elections to do with loss offsets, which might be to do actually with the previous year when you're filing a tax return or doing a subvention payment. But it's just tax hygiene, do the elections and do the administration correctly before year end.
So that is 8 things to think about quickly, but the full checklist is on the BDO website, or they can contact either of you or your team. Thank you so much. Appreciate it.
Thanks, Maddie.